This conference will now be recorded.
All right, so good morning, everyone. Thank you so much for joining us today. We are going to be doing an ancillary product training with Florida Combined Life and US Able. For those that do not know, Jason Skiba is joining us today. He's a sales executive with Florida Combined Life. He's going to be the one that's taking over. He's going to be our presenter today. So make sure that you can hear us and you can see our screen. It's being shared. A lot of important information is going to be shared today. For those of you that are new, you're going to be learning a lot. For those of you that are seasoned, you're still going to be learning a lot. We always learn something new every time that he does a training with us. So thank you so much for joining us today, Jason. This is going to be recorded, so I will send it out after the fact. Please make sure you are all muted. There is a little chat icon, so if you have any questions along the way, we will open it up to answer those questions. So please just type those questions in that little chat icon and we will get to as many of those as we can. So without further ado, Jason, you can take it over.
Okay, thank you, Jamie. Great to be with you guys this morning. And as Jamie mentioned, there'll be certainly something for everybody in this discussion of the ancillary plans. And a lot of it will be high level, but then we'll also get into some details, some key features that really are things that you can use to position these ancillary products effectively. And I like to say that really you are in the position of being educators. You're helping people through the complex questions of insurance and helping them to make the best decisions to protect themselves and their families from unexpected out-of-pocket costs. And so this really is about shoring up those gaps in their coverage and protecting again them and their family, and also really helping them to get coverage that enables them to have the best health possible, especially when we talk about the dental. And so we'll get right into the dental. That's let's see, the lowest hanging fruit, so to speak. Let's see, why is this not switching? Okay, here we go. We have 3 plans, 2 PPO plans, the copay and the choice, and we'll get into a little more detail about that. We also have a non-qualified prepaid plan, and I'll just say for the most part, it's best not to offer this plan unless you know for a certainty that where you are offering this plan that there are dentists that are accepting new patients. That's really critical. And it has a lot of limitations. It doesn't cover as many procedures, certainly as the copayment and choice. And it just, for the most part, it just is not a great option. So bear that in mind. Be very, very careful if you decide to offer that at all. And if you do, again, make sure that there are dentists that are willing to take new members. But the PPO dental plans, that's what we'll focus on. They're outstanding. And one of the things to keep in mind, there's Q and QF. Now, Q is if you just have a child up to age 19. Sometimes parents will say, I'm not going to spend the money on myself, but I definitely want my child to have, the best dental care that they can get. And so that would be a Q plan. Now, if you've got an adult and children on a plan, then that would automatically be a QF plan, or just an adult, that would be a QF plan. Now, the coverage for a pediatric is exactly the same, whether they're on a plan by themselves or whether they're on a plan with an adult. So looking at that pediatric coverage is different, works different, as you know, than adult coverage. So for example, there is no annual maximum and there is no waiting period. So they immediately get coverage and there's no limit to how much work they could get done in any given year. Also, the max out of pocket for one child, so the adult on the plan, the most that they could possibly pay for the coverage of one child would be $350. So whether that was with the choice plan or the co-payment plan, either way, they will only spend up to $350 for that child. Now, if they have more than one child, the most that they're going to spend is $700. So if they had 3 children, 5 children, 10 children, they're only going to spend up to $700. Also, something good to keep in mind is they're only going to pay for the first 3 children. So let's say, of course, very unusual, but let's say they had 10 children. They're only going to pay premium on the first 3. So if they had 4 children, 5 children, again, only pay for the first 3 children, and then all the rest would be covered. Obviously, if they have 3 children, then they pay for all 3 of those children. One of the questions that comes up in this is in regard to the coverage for orthodontia. The only thing that is covered under the plan is what is referred to as medically necessary orthodontia, and that has been defined as cleft palate or cleft lip only. So that is the only orthodontic coverage that is included automatically in the plan. So that's something good to keep in mind. So again, we'll get into a little more how the plans work a little differently in the next one. And this is the adult coverage. So 19 and older, this is how it works. We have, again, the 2 options, choice and co-payment. The big difference between the 2, the choice and the co-payment. Choice is our largest network. So if you're living in a rural area, or specifically if you're selling to someone who's living in a rural area, you'll definitely want to go with the choice. Also, if someone has a dentist they're already using that they love and they don't want to change, and that dentist is in the choice network, absolutely sell them the choice plan. The co-payment plan is less premium per month, $25 as opposed to $34. And also it has a set copay for every procedure. And typically, really pretty much across the board, those copays are going to be less expensive than when a member pays a percentage of the covered procedure under the choice plan, because the choice works based off of a percentage of the negotiated rate. Now, for preventative services, it's covered at 100%. But when you get to basic services, like say, for example, fillings, now you're going to pay, the member's going to pay 20% of the negotiated rate. When it gets to major services like root canals or crowns, they're going to pay 50% of the negotiated rate. And we'll get more into that in a future slide. So there is a 6-month waiting period for basic and major services if the person has not had credible coverage 9 of the last 12 months. If they've had coverage 9 of the last 12 months, then they'll just roll over and they'll from day 1 have the full coverage. Now, credible coverage is coverage that included preventative, basic, and major services. So for example, if someone did have the prepaid plan for a year, that would qualify for getting onto the PPO plans and having met then that waiting period. And we'll talk too about the rollover, which is included here, mentioned on this slide. Here's one of the biggest things you want to be sure that everybody understands. We have the best network in Florida. In fact, we're ranked number 1 and number 3 by consulting companies who look at all the plans and say, okay, who has the best plan? Now, what they mean by that is who gives the most discount. In other words, how much of an actual discount does an individual get on these plans? Because there's plans out there, I'm sure you've heard about them. You know, they got $2,000 max out of pocket, $5,000, especially like group plans. But here's the reality. The actual discount that's being passed on to the member may be very small. You see, they may only be getting a 10 to 15% discount. Whereas with our plans, they're getting 30, 40, sometimes well over 50% discount, and we'll look at some examples. The other thing they look at is how utilized are the plans. And what happens is when our members go and they use the plan, they keep going because we have excellent dentists, they see the savings, and so they keep going. Now, this slide is probably the most important slide when it comes to dental, because if you grasp this slide, then you'll get the dental. This covers not only the $1,000 annual maximum, because sometimes that's something we have to educate people on, because they think, oh my goodness, $1,000 annual maximum, I'm going to get one crown done and then boom, I'm going to be on my own because I've used up all my benefit. That is not the case, and that's nicely illustrated on this slide. This also helps us to understand how a 6-month waiting period works, and also the benefit of still having the insurance even when someone has a 6-month waiting period. So you can see the 3 columns: the market rate, in other words, what someone would pay walking in off the street; the contracted rate, this is the amount that the dentist is paid by Florida Combined Life for any given procedure; and then the claim paid, this is the part that actually is paid by FCL directly. The contracted rate is what a dentist ultimately receives, split by the claim paid by FCL and then the copay paid by the individual member. So the claim paid is the part that goes against that $1,000 annual calendar year maximum. So for example, let's say someone had a 6-month waiting period and they needed a crown. And you'll notice there, we'll use the example here, $1,500. Now, a particular crown, this is one of the more expensive crowns, can be range in price dramatically because it's not regulated. So one dentist may charge $1,500 for that crown, another dentist may charge $1,800, another dentist may charge $2,000. There's no regulation, so they simply can charge whatever they want. The second somebody has our insurance, they are protected by that contracted rate. So let's say they did have a 6-month waiting period, they hadn't had prior coverage, they needed a crown, they now are going to pay $564 for that crown. They're going to save themselves $1,000, and there's example after example after example of this happening. Many times it's agents who have not had dental insurance in the past, and they get coverage and they take advantage of this. So even in that 6-month waiting period, a member that has to get work done will get the contracted rate. Now their preventative work kicks in immediately. So from day one, preventative work, like for example, on the copay plan, $10 for a cleaning. They get that from day one. But if they needed something major, now they're only paying the contracted rate. Now, when you look at the claim paid, let's say they didn't have a 6-month waiting period, or now they're past the 6-month waiting period. That's what FCL pays on the claim. So for example, with that crown, they would pay $249. In other words, the member would have a $315 copay, so that dentist would get $564 total for that crown. Why this is so important to understand is because as you look at the claim paid on the 2 cleanings in a year, on the couple fillings and a crown, that totals up to being $473 that FCL has paid out. So that's a pretty big year. If you get your cleanings, of course, you always want to get that. A couple fillings and a crown, that's a lot of work done in a year. But you'll notice that they've not used up to $500 of their insurance benefit. Therefore, they would qualify the next year for the rollover of $350. And we'll get more into that in the next slide. So that means the next calendar year, they would get their $1,000 annual maximum. And now they would have another $350 of benefit because the previous year, they did not go over $500 of their insurance benefit. But what this also shows, let's say they needed 2 more crowns. Let's say they needed 3 crowns in the fillings. They still would not get to $1,000 of annual maximum. So they could get 3 crowns, or let's say they needed another crown and root canal and 3 or 4 more fillings. They still would not reach the $1,000 annual maximum. So well less than 90% of our members ever exceed their $1,000 annual maximum. And for the very small percentage that ever do, they then are protected by our contracted negotiated rates. They'll always have that, which is really a big safety net. Let's see, you see a chat came in. The question is, this contracted rate for a crown the average rate? It's a little, it's close to average. It's one of the higher end crowns. They actually start quite a bit lower, some of the crowns, but this is one of the more expensive. I think there's one more that's more expensive, but this is on the higher end. So this is a real safe one to use. Yeah, appreciate the question. Yeah, and please feel free on the questions, and there'll be other points where we'll have pause for questions as well, but feel free to type them in. Now that maximum rollover, that's something that individuals can keep qualifying for up to 3 times, and then they will have a whole $1,000 extra benefit in addition to their $1,000 calendar year benefit. So you think about that, only, you know, well over 90% of our members never exceed their $1,000 calendar year maximum. The only time they would dig into their rollover benefit is when they exceed their calendar year benefit. So that just sits there basically as a safety net once they earn it. And you know, typically, frankly, most folks never even touch it. And here's why: because when people are getting their preventative work done, it's only every 3 to 5 years that they need something more, you know, extensive, and they've got the coverage of the $1,000 annual maximum. So this really is just an added layer of protection that is there just in case somebody just has an excessively difficult year. And here's how to find it. Sometimes this has been a question, well, how do I find out? All they have to do is go to floridablue.com, and in the drop down box where it shows their health, just click on dental, and then it will bring you to the number 3 where it talks about benefits, questions. You can print ID cards here, and under benefits, if you hit the learn more, then it pulls up where you are for the year, how much has been spent, and how much you have, like for example, with the rollover balance. So that's where individuals can see that, so it becomes, you know, more real to them. This program, Oral Health for Overall Health, outstanding program. This is for individuals who have our health insurance, Florida Blue health insurance, but then they also have our dental, and they have any of these conditions. For example, diabetes, coronary artery disease, anyone who's had a stroke, anyone who becomes pregnant, oral cancer, head and neck cancers, or syndrome, Sjogren's syndrome, not easy to say. And what this is just, these are free benefits. This is in addition to what they're provided under the plan, but this does not count toward their $1,000 annual benefit. So they get 2 extra cleanings, and then depending on the condition, they may also get periodontal scaling. So in other words, that deep cleaning you'll hear talked about, and that's included. Now, here's something to think about. Someone who has not had coverage, they have a 6-month waiting period. If they have one of these plans, they get those free benefits even during that 6-month waiting period. So if someone has diabetes, for example, or any of the conditions, they get those benefits in that 6-month waiting period. So if they needed a deep cleaning, they then would get it in that 6-month waiting period because of the periodontal benefits. So it really is a fantastic plan, benefit something to talk about, especially, and really about 20%, anywhere from 15 to 20%, see different numbers on that, qualify for one of these. But here's why the plans offer this. It's because when someone is taking care of their oral health, their medical bills go down. Here's an example, diabetes. For individuals who improve the health of their mouth, their medical bills go down 18%. So that's why they offer these savings, is because it really is a savings to Florida Blue. However, if we think a moment about the individual and the benefit to them, right? Their medical bills have gone down, but that also means they feel better. They're on less medications, they're going to the doctor less, so they have improved their life. They've improved their health. And this illustrates a very important point, I think a tremendous selling point, is that sometimes people don't recognize the connection to their overall health that is directly linked to the health of their mouth. You see, our blood, our gums are a direct line into our bloodstream. So if we have plaque, if we have toxins, especially below our gum line, that's being fed right into the body. So there's all kinds of studies that have been done that show that a healthy mouth contributes to overall health, whereas when there's not great health in the mouth, very serious conditions, as mentioned, diabetes, coronary artery disease, even cancers, Alzheimer's, are impacted in a negative way by those toxins that are being fed into our bloodstream. Any inflammation someone has greatly worsened by this condition. So when we're talking to somebody and you ask them, hey, is your health a priority to you? They say yes, and you tell them you have to have dental insurance. Because when you're paying $25 or $34 a month, you are going to go get your preventative work done. And that's one of the single greatest things you can do for your overall health. So if you care about your health, you need to get dental insurance. Not to mention the sad reality that up to actually well over 50% of Americans never go for preventative work. So when they go to the dentist, it's super expensive and it's painful because they're not getting preventative work. Eventually, everyone goes to the dentist. So the most cost-effective way to care for our oral health, without question, is dental insurance. And we have the best dental insurance in the business. So this really is, to me, a tremendous selling point. Now, this program, let's say, for example, someone doesn't have Florida Blue Health, because you can sell this to anybody. They don't have to have the health insurance. Or they become pregnant, they can self-enroll by going to floridabluedental.com, clicking on the box under oral health for overall health, and then clicking enroll. And they can self-enroll and get on those, get those benefits, of course, once they are past their effective date on their policy. Also, anyone who has our PPO plans can go anywhere in the United States and be covered as if they're in their home network. All they have to do is go to floridabluedental.com. In fact, I'll do a little demo when we get to the end of this section. floridabluedental.com, put in where they are, put in the plan they have, and then they can see who's going to treat them as if they're in their home network. So there's no cost difference to be, and it doesn't have to be an emergency. It can be somebody who spends, part of the year somewhere else, and they can get even their preventative work done again as if they're in the home network. Also, you'll get the question for sure by some, does it cover orthodontia? Does it cover cosmetics, like for example, implants and things like that? The direct answer is no, that is not included. However, there is an orthodontic discount program and a cosmetic discount program that is automatically included. And some dentists have agreed to give our members a 20% discount off of their usual and customary rates. And that's what's important. This isn't just a pretend 20% discount. This is off of their usual and customary rates. And that's critical. It's an actual, real 20% discount. And so anyway, and I'll show you how to find that as well. So really a nice selling feature. And then the last slide on dental, this is brand new, just started this month. So these, the notification of this has gone out to our members, and this is the Blue Dental Loyalty Program. So after someone has been on our plan for a year, they're going to get a special customer service number, concierge customer service number. So they get expedited assistance. Once someone's had our plan for 2 years, they'll get an additional cleaning. And again, this does not count toward their out-of-pocket costs. This is a free cleaning. And once they've been with us over 3 years, then they get 2 additional cleanings. So it'd be the same coverage or the same benefits, for example, as someone who had a more serious condition like diabetes. Now on this slide, don't get confused. It says $350 added to your annual maximum. They're also including in this slide not only the new loyalty program, but also the maximum rollover. So that's why that $350 is mentioned on there, but that's really just directing attention to the maximum rollover as well. So let me, before I take questions, see if I can escape out of this. And I'm going to just briefly okay. Why is this not okay, here we are, Florida Blue Dental. I just want to show you this real quick. This is how you would find a dentist. This is also the most up-to-date way that you can find a dentist. There's a directory on floridablue.com. However, the most up-to-date is here on floridabluedental.com. And there's all kinds of stuff for agents, frequently used documents and things like that. But what I want to show you is to find a dentist, like say for somebody's out of state or something. Let's do Atlanta just for super easy. Say they're in Atlanta. And then in our click down box, here's where you would select what plan they have. They have the choice or the co-payment. This is also where you can see the cosmetic discount program or the orthodontia program. This is how you search that. So even in whatever zip code you're in or your area, or you can again teach your clients, this is how they could find out who's in these discount programs. But let's say, okay, we do the co-payment and we're in Atlanta, visiting family for a month or whatever, and we need to get some work done. Boom, we just pull it up, and then these are all the dentists that would be in the network and would treat our member as if they were just right here in Florida. And this also is where you see the oral health for overall health, learn more, and then boom, enroll. That's it. So really simple, very straightforward. And now let me see if I can get my PowerPoint back. Okay. Oh. There we go. We're back. So any questions? Let's see. Okay, I see a couple of questions came in. Let's see here. Is this contracted rate for a crown the average? Okay, already has. Can we sell dental any other state? Just for Florida. Good question, but just Florida only. On the loyalty program, if someone has had a plan for a long time, including the will those years be counted toward this program? The program only counts if someone is on the choice or the copay. Those are what they will count. Choice or the copay plans only. Yeah, it doesn't count for the prepaid plan. So yeah, appreciate those questions.
Jason, there is another question in here. I'm not sure if you can see it or not. It says to the organizer, but anyways, it says, Why, when we call a dentist office from our provider list and tell them we have the co-payment plan, they automatically say they only accept PPO plans and not the co-payment plan? Even though we tell
Yeah,
them
good.
PPO plan, is there anything we can do to say to avoid this confusion?
Yeah, unfortunately, that what it is that our plan is so unique because it is a PPO plan, but because it has co-pays, it confuses dentist offices because, of course, they work with so many different dental carriers, and no one really has a plan like this, especially that has the co-pays that are so low. So we do have to educate the dentist offices. Now, I will just say, if you run into this, please don't hesitate to send that along, especially if you can't convince the dentist office, because provider relations does an amazing job getting in touch with them and getting them um, re-educated so that they, give those benefits to our members. But it really is because our plan is so unique. That's why they run into it, because it is a PPO plan. It's just an outstanding plan, and it gives some features that other carriers just don't offer. So yeah, it is unfortunate that, and sometimes with dental offices, they have a lot of turnover, and some of those folks sadly are not the sharpest folks. Many are outstanding, but just some of them, they just get kind of stubborn, and it's like, well, if it looks like this, then it must be this, and they don't listen. Um, so yeah, good question. But again, if you ever really run into a problem, reach out to Jamie and email that to me, and I'll get provider relations, and they typically that same day or by the next day are on it. They really do an outstanding job. Let's see, look like a couple more questions are coming through. Loyalty program, let's see. On the co-payment plan, are there any other dental codes, procedures covered that are not on the scheduled benefits? I don't believe so. I think the scheduled benefits that comes out includes everything. There may be exceptions, but I don't know that there is. If you had something specific or please let me know, but I don't think. I think pretty much everything they show is
I know there is
what
that.
they pay on.
I know there's a short version, like
Please go ahead, Jamie.
when we have that flyer, it's a very short version, but then there's the longer
Oh,
version
yeah.
that, yeah, the longer version has everything more so like in detail with a breakdown of so many different co-pays of every, you know which one I'm talking about.
Yeah. Yeah, it's
Yeah,
like 4 or 5 pages or just breaking down all the different ADA codes that are covered and the copays for each of those procedures.
right.
Um,
The
yeah,
summer,
because there is just that abbreviated one that's just got, very limited.
yeah, it's
Yeah.
very basic, but yeah, the larger one pretty much breaks everything down. Yeah, and it's several pages. So I would imagine pretty much everything is on that one.
Yeah. Another question came in. Does the longer, all the codes? Yes, the longer version, I believe, has all the codes. Does the oral health for overall health added benefits for children? Actually, the pediatric, no, that's not a part of it because there's unlimited benefits for the children already. So they really, I mean, it's incredible coverage because there just really isn't a limit or timing or anything. If they need something, they can just get it. So yeah, good questions though, guys. So I will move over into the US Able Life portion. Again, much of this, I'll just say the needs analysis is so critical for the dental, but also especially for this. When you're sitting down and you're getting the information from individuals, who their family is, what kind of health conditions they may have, that really is what's going to lead to you being able to position these products in a way that will help the individual to see the benefit to them. And so the 3 plans is the accident, critical illness, and the hospital. Some of the things, this is all tax-free cash money going to these individuals. One of the nice things too about these plans is they can get effective dates on the 1st and the 15th of the month. Dental is only on the 1st of the month. You can actually get coverage the same day if it's like early in the day, like on the 1st or on the 15th. And now you can pick up to 4 days out, or 4 different dates going forward. So let's say someone wanted to start a month out or a month and a half out, they can do that. Binder payment is taken right at the time. They can use credit card for that. Ongoing payments, I just say still at this point, and this is something they're working on and will change, but right now, if you can get them on automatic bank draft, that is the best way to lock it in, so that you know that they're going to stay on and get the benefit of the coverage when they need it. Or if they pay, with a credit card, they can pay for an annual up front. That's also a very good way to do it. Underwriting on the accident, really there's not any health questions other than if someone is fully disabled, they cannot get the accident plan. The other question is in regard to their driver's license, if they've lost their license in the last 5 years. And then there's 14 industries that they won't cover, like for example, roofers, people who work with asbestos, people who work with explosives. So most of them are pretty self-explanatory, because this is 24-hour coverage. And we'll get into that as we get more into the accident plan itself. Critical illness has the most underwriting questions. And, I hear from time to time, somewhat consistent, that they are a little safe or a little conservative in offering the critical illness, especially the higher amounts. So just really emphasize to the individuals, the pricing on the critical illness is so low. I mean, it is just very, very reasonable. And so it will initially either be approved or denied, or approved for a smaller amount. So for example, if someone's trying for 50,000, they're not going to get it right then. US Able is going to do further underwriting, because at the moment, all they're doing is checking in that 30 seconds or so that it takes to get an answer, what kind of prescription medications that person has taken over the last 5 years. So that's all they're checking. So if they're going for a lower amount, 10, 15,000, and they're healthy, that that's going to go through no problem. Hospital, very straightforward, less questions, but again, just it will be approved or denied. We had new flyers come out in the last year or so, and we'll get into some of that. We'll get into the sales briefs. Really encourage you to get familiar with the sales briefs and the field reference manuals, but in particular the sales briefs. Because here's the reality. You don't need to know all the details of these plans. It's really about knowing the biggest parts of them, the highlights, and then offering it, providing a scenario that helps the individual see really the benefit of the plans. So let me escape out of this. I'm gonna also pull up, yeah, here we go. So here's the accident plan. And again, this really is, we talk about low-hanging fruit. Man, this plan is just outstanding. For the premium, there's 2 plans, plan 1, plan 2. 95% of our sales are plan 2, because for just a few dollars more, you can see here, plan 1 to plan 2. Plan 1 is $14 for an individual, and plan 2 is $18, but the benefits are much richer. And so, of course, this is triggered by someone having an accident. So once someone has an accident, whether it's at work, whether it's at home, no matter where it is, this is going to be tax-free cash money going directly to the individual based on that accident, based on everything surrounding that accident. So the follow-up physician visits, the trip to the ER or the trip to the urgent care center, it's just, and the more, and the worse the accident, the more the injury, the more the claim will be, because it's stackable. Each injury, each doctor visit, it just keeps piling on. So frankly, our largest claims are typically from car accidents, of course, because there's multiple injuries in a car accident. But when you look at this too, you see that, man, if someone has an accident and they're admitted to the hospital, that's a $1,500 benefit right there. It's $340 a day if they're in the hospital. One of the things that really separates us, I'll give you two key things. Our follow-up physician visit benefit. Our claims average 3 follow-up physician visits when there's a need for one. So the 3 visits at $160. Now it says on the sheet up to $160. That's not based on what someone's copay is. What that's based on is how much would the doctor charge for that visit. Well, there's not a doctor alive that doesn't charge at least $160 to walk in the door. So $160 follow-up physician visits. You can get up to 6, but again, we average 3. So that's almost $500 of benefit just in the follow-up physician benefit. Our competitors all come in at about $40. So this is one of the ways we really separate ourselves. One of the other ways is that there's no limit to the number of accidents someone can have in a year. And most of the other plans, in fact, all that I'm aware of, have a limit, of 3 accidents in a year, whatever it is. And so when you think about somebody who's got a family plan, you got a spouse and you've got kids, you can have a number of accidents. I have one agent, she had 3 claims in 1 month. She had a claim and one of each of her sons had a claim. Of course, one was a wrestler and one was on the football team. She had 3 claims in 1 month, so, and that was early in the year. So she was so glad that there was no limit to the number of claims. Really a key feature. There's also an accidental death benefit of $40,000. Also $150,000 if it's on a common carrier, for example, a plane or train, something like that. And that's included. So another way to, people position this almost like a short-term disability plan. If somebody gets injured and has to miss work, this can fill in the gap, from missed work. Also, you imagine, someone who's got a child and they got to go back to the doctor, maybe to get a cast done or something, and they got to leave work, but they know they're going to get $160 for that visit. I mean, that's a big benefit to individuals, a huge benefit. Now, this is a great one to have a story for, or even ask them, hey, when was the last time you had an accident? How much did that cost you? What was the out-of-pocket for that? And then you can compare what they would have gotten if they had this plan. Some agents that have not had this have used past experiences to say, man, I had an accident before I got this. Here's how much I would have gotten if I had that. But again, having a story is really critical. And one of the benefits, so there's the outline. Now here's the agent sales brief. And again, this is some of the highlights, and this highlights one of the things I didn't even mention yet, and that's the wellness benefit. So if they're on that plan 2, after they have had the plan for 90 days, they can call USAble up directly. And if they've had even just a flu shot, an eye exam, a physical, a number of things that will qualify them to get that $75 wellness benefit. So instead of it being $18 a month, now it's not even $12 a month when you factor in that $75 wellness benefit. So who are we looking for? Well, people with a high deductible plan, people who have children, people who are getting up to the age of 65, because once they turn 65, they can't get this. But man, if you can get this for people before they turn 65, what a valuable thing you've done for them. Because we know as we get older, right, it's easier to have an accident, and then the accidents typically are worse, right? There's a higher chance of getting a hospital stay. So this really is just an outstanding plan at a very reasonable price, and you really can't miss. So I'm going to look here at the chat and see. It looked like a couple questions. Let's see. I've used my accident plan already this year on my husband. They pay very quickly. Excellent, Ashley. I'm sorry he had an accident, but I'm glad they paid quick and took care of it. Will claims be paid a year after the accident if they were going through continuous therapy? Good question. They ask that the claim be made within 90
Right.
days is what they
Okay.
ask. We got somebody who's not muted. Thank you. So they ask that you get in within 90 days. However, if you have ongoing continuous therapy, then just alerting them that, hey, I've got this claim coming is all they ask. And you can either break it up and send in chunks of it at a time, or you can wait until the end and send in the whole thing. So yeah, appreciate that claim. Does a 90-day waiting period apply to all accidents? There's no waiting period when it comes to the 90-day waiting period. Was to be able to get your wellness benefit. So once someone has this, let's say they got it beginning of this month, they have to wait 90 days before they could call US Able to get the $75 wellness benefit. There's no waiting period when it comes to accidents. So literally you could sign up, on the first, have an accident on the second, and it would be covered. So there's no waiting period. Also, you're covered out of the country. So you're on a cruise, not right now, obviously, but when we get back to some form of normalcy and you're able to travel, then you're out of the country, you get hurt, save your bills, come back. They do ask if you can at all possible have them in English, and send them in and you can make a claim and they'll pay that claim. So this, again, I could go on, but really just an outstanding plan. They have a little example of someone falling off a ladder and how it would work. And so that's good to get familiar with, get comfortable with. Again, this is where the needs analysis comes in, man. If they've got a child that's playing sports, and I can't tell you how many times we've had parents, because you have to have a parent on the plan along with the child. And I can't tell you how many times I've heard experiences where a parent got the plan simply to cover their child that was playing sports, and then the parent got hurt and ended up, being able to be covered and make a claim. So just an excellent, excellent plan. Let's see. So now let's talk a little bit about the hospital confinement. Very straightforward. It's a daily benefit, a hospital admission benefit. That hospital admission is paid once a year. And then a benefit that goes up with the intensive care. Where we always positioned this in the past was for people who are planning to have a family. Because if someone got this coverage, a woman got this coverage before becoming pregnant, when she went into the hospital to give birth, she can make a claim on herself and her child's hospital stay. And the child is automatically covered for the first 90 days of life after birth. So if they had had some medical issues and stayed in the hospital, then they would be covered through that time period. I will just say, and here's the other caveat, or really something that no other company does. If the woman is already pregnant, her husband, biological father, significant other can get the coverage on themselves, even though the wife, the spouse, the significant other is already pregnant. The other, the husband can get coverage so that when the baby is born, then he could make a claim on the the hospital stay of the newborn child. And again, the coverage would be for 90 days for that newborn child without having to add them to the policy. That's just automatic. And so where you need to be careful as an agent is just buying a claim. If somebody just gets a claim and then cancels, you're going to end up with a chargeback. So you really want to, position it in such a way that someone is going to keep it and benefit from it. And of course, especially if they're going to plan on having more children, then of course they'll be wanting to keep it. But also the other thing that's changed is of course COVID-19. And so there's way more hospital stays because of COVID-19 now. And then this has become, after the accident plan, again, we saw way more accident plans. But now our second bestseller is the hospital plan, because of course people are concerned about having a hospital stay now more than ever, because it is frankly more possible because of COVID-19. And that also just speaks to the change in the dynamics around us. We all have felt the impact of a changing environment to where the unexpected really now is not that unexpected. And so individuals are wanting to protect themselves as much as they can. So the accident plan, the hospital confinement, the critical illness plan, of course, the dental, these are really helpful in getting people in a position where they're not going to have out-of-pocket expenses that they can't cover. And so don't hesitate to give people the opportunity to afford themselves to this protection. It really is incumbent on us as salespeople to give them that opportunity, but we have to educate them just enough, some of the highlights as to how this works, what the benefits are, so that they know what they're either accepting or rejecting. So again, looking at the sales brief, who are we looking for? People with a higher deductible plan, people that again would struggle with the extra expense of a hospital stay. The prices are cheaper for people who are young, and then of course those that are turning 65, that would be their last opportunity. And I'll just show you the pricing here, just to here's the breakdown. It is according to it's age banded. So once you're locked in at a particular age band, then you keep that, and the price doesn't go up even as your age continues to go up. Okay, let's see. A question came in. Could you write a child with known problems before the 90-day coverage period ends? Good question. The answer is yes. Even though there are health questions with this plan, if someone has the coverage, and then for their newborn child, after 90 days, they can get their child added to the plan without health questions. And that's the only time that will happen like that. So yes, they absolutely can add the child after the 90 days without having to answer any health questions on the child. It's just automatic. Yeah. Thank you for the questions, guys. Those are good. Last one we'll talk about is the critical illness, and this covers all the main ones: heart attack, cancer, stroke, and then some of Lou Gehrig's disease if someone becomes quadriplegic, if they need a major organ transplant, and some other things as well. Bypass surgery, stent, and things like that, just at a lower percentage of the face amount. And again, this is age banded. One of the biggest things on this is that they can get two major payouts. In other words, you can double the face amount. So if they had a $15,000 plan, then they could get up to $30,000. So whether that would be two separate big payouts or smaller payouts due to some of these other procedures that come at a lower percentage of the face amount, would just depend on their situation. But so for example, someone, look at how reasonable this is. Someone who's 40 to 49, so anywhere in that age bracket, for a $15,000 plan, it's $13.68. I mean, it's amazing. So if someone had a heart attack, boom, they get 15 grand, tax-free cash benefit. If they got cancer, boom, 15,000. Now, with the recurrent benefit rider, in other words, the ability to get two payouts, you cannot get two separate payouts for having cancer. And it's the same with, you can only get one major organ transplant. Obviously, if you get Lou Gehrig's disease, you're only going to get that once, or end-stage renal disease, you're only going to get that once. But you can actually get two separate payouts for having two separate heart attacks and two separate strokes if they're separated by more than 180 days. So just remember, the only one that really comes up as a real question is if you get a payout for cancer, you will not be able to get another payout for cancer if you have a different cancer down the line. But if you had any of the other conditions, or you had a heart attack or stroke, then you would get a second payout. Now, this is outstanding, especially for individuals who have a family history of any of these things: cancer, heart attack, stroke. The age bracket too, where you can start really talking to people about this, is when they start getting into their 30s or 40s, especially because by that point, their parents have probably had some of these issues, or even some of their friends. So it really is, and again, it's still very reasonable. The pricing is reasonable, and just outstanding coverage for individuals. And here's the sad statistics on this. 42% of men are going to end up with cancer at some point. And depending on what report you look at or study, anywhere from 36 to 38% of women are going to end up with cancer. And so when you combine that with the, just the high amount of heart attacks and strokes that take place every year in the United States, statistically speaking, individuals have a very good chance, sadly, of using this product at some point. Now, at age 75, and this is the only plan that has this one limitation, at age 75, the face amount drops to 50%. So let's say, again, they had that $15,000 plan at age 75. Now it becomes a $7,500 plan. So if they already had a payout at 15,000, that's great. If they had another payout after age 75, it would now be 7,500. If they had not had a payout yet, and they end up with two payouts after the age of 75, then both would be at the reduced rate of $7,500. And again, that's the only one that we have over time that has that limitation. So, and there is a pre-existing condition look back, but again, all of that's really covered in the questions, in the health questions. And again, the health questions are a little more extensive on this because it is obviously dealing with illness and health conditions. So a little more stringent. So I'll just conclude with this again, just highlight, getting familiar with the highlights of these plans is really the key, and helping people to understand the benefits, also where they fill in the gaps in their insurance is really important. And when they understand that, then they're really going to be in a better position to make a decision as to whether or not they can afford this. Because, you say, well, they can't afford it. It really comes down to, well, do they see the value? And sometimes they simply can't. We understand that. That's just reality. But many times, it's also a matter of that the person was not helped to appreciate the value of what the plan offered and the protection that it afforded. So, give them that opportunity by highlighting some of the things, some of the benefits, and again, and having an example is really helpful. If you have a personal example or use them as an example, that's another one. Hey, has any of your family members had a heart attack or stroke or cancer, or any of their friends? I guarantee you, people get into their 40s and their parents have either dealt with this or their parents' friends. And sadly, even now, many people that age and younger are getting some of these critical illnesses. So that's just, again, reality, but we're in a position to help protect them from, that becoming also a financial disaster for them. So that pretty much comes to the end of what I was going to cover, and certainly happy to cover any questions that you may have. And maybe let me stop sharing so that make presenter. Let's see. How come I don't see? Oh, there we go. Okay. So I just traded it back to you, Jamie.
Thank you, Jason. Does anyone have any last minute questions for Jason before we wrap it up for today? It's 11 o'clock on the dot.
Man, I try, Jamie, I try.
You are good. You are good. Oh my gosh. So do you mind sharing those decks with us?
Sure, I'll send that to you. Yep.
All right, awesome. Okay, well, I don't think we have any other additional questions. So as you guys know, if you guys have any additional questions, you can shoot me an email and I'll forward it to Jason. As always, he's pretty quick in getting back to us and answering the questions that all of you have. As always, we really appreciate your time with us. We always learn something new every day. You have a lot of great information that you share. I hope you benefited as much as I did. I know you guys always do. We do try to have these trainings as often as possible. We'll probably have another one in another month or so. We'll try to have one once a month for 2021. Other than that, if you guys don't have anything else, we will wrap it up for today. Thank you so much for your time, Jason. We really appreciate it. We appreciate you. And you guys enjoy the rest of your day. You guys take care. And thanks again, Jason.
Yeah, great to be with you guys. Have a great day. Take care. Thank you, Jamie.
You're welcome. Bye-bye, everyone.
Bye now.